Good day, investors! It's bad English and good financial advice here. Should you hurry in the stock market and investing generally? Yes and no. Therefore, in this video you will get a confirmation of your point of view no matter what side you guard. I will explain disappointment theory in psychology and economical application in an example. Do you know it already? We all know that people who are always in a hurry despite what's happening around them. They have their own rhythm, it doesn't matter that it's only a total bustle. They like to do everything in the same moment as thought comes into their mind. For example, to smash the like button under the YouTube video. On the other side, we know those who think too much, too long, while they're weighing all pros and cons. The opportunity is already gone and has changed her face, as it was with those who waited for a huge crash to continue after March 2020. So where is that lovely golden balance line that was confessed by Gautama Buddha in investing? Please write down in the comments below. Should I start from arguments for hurry or for waiting and weighing? And sadly, that will not change anything because the video has already been recorded. Yeah, for sure, those who hurried up to invest in Bitcoin probably get a lot of profits, but the same quality that helps them buy early forces them to sell too early. And again, they bite their elbows. While they see the Bitcoin even at $10,000 and 30, 40, 50, 60,000 later. Because they sold all their bitcoins in a hurry at $2,000 and did not look at the current conditions. Yes, they made some excess maybe, but as the sign says us, we humans feel more disappointed when we see this kind of lost profits. The general meaning is that people feel the pain of disappointment and do everything to avoid this kind of pain. For example, when the market rises, investors want to sell quickly in order to lock in some profit. They worry that if the market goes down, they will be too upset that they did not have time to sell it on time. This is not rational, by the way, because the markets can go higher and higher. And mathematically, you should always stay in the game with positive returns. And the stock market is that case of investing with positive returns. If you do it properly, for sure. If you earn something and you have it and then it disappeared, you experience pain and much more than if you didn't even have what you had. Sounds weird, but it's proven by science. So here I gave weak evidence for being a fast guy in investing. Indeed, every time when you're thinking about entering into assets, you just stay away from the game of positive returns. Because historically every year gave you about 6% of return, therefore we can calculate that staying away from the market in investing costs you about 0.5% every month, or about 0.016666666 every single day, mathematically. But again, here is some unbelievable truth. We are not calculators, we're humans with calculators, OMG. If you make an investment decision in a rush, you can easily make a mistake. That will cost you much more than 1 to 5%. And this list of possible mistakes is incredibly big. You can make emotional purchases, you can buy some perspective ETF without enough analysis, you can buy after Warren Buffett or any other guru purchases without understanding the meaning and purposes of these buys. Headlines screaming, Buffett bought gold, a new era has begun. But when you figure out the exact case, you see that he bought only 0.05% of his portfolio, and this is not gold at all, this is Barrick Gold, a mining company that pays dividends in addition. So easy to be fooled nowadays, and after this kind of mistake, it doesn't matter if you're wrong or right. You're gonna lose money. Your precious, desirable, tasty money. Don't do it! Therefore, it's better to miss this 0.5% and spend a month for research if you are not sure about some kind of investment. No need to rush. Take your time to buy the first shares because you have itching. In principle, do not rush to buy anything until you understand why you need it, until you understand how this world works and what rules it lives by in the Western world. Don't ask what to buy and when to buy, this will be a game, a gambling, a casino. If you ask somebody what to buy in your portfolio, 99% you're doing something wrong. Right at this moment. Understand your life and goals and only then start looking for answers. Just looking for something to invest in is likely to lead you to losses. It will be either products from brokers or assorted trust and after following systems or structured products or something else. But it's definitely not what you really need. Why? Because you don't know what you need. This is very important, especially now that the topic of investment has become such a hype. Investing is also about terms and goals, and you should not buy a stock if your investing time horizon is less than 3-5 years at least. Therefore, the money that you once pushed in the stocks will probably be available for you after 5 years only, or you will sell it with a big discount and again you will make a big mistake that every Israeli and Warren Buffett advised to avoid. Don't lose any money. It may seem weird, but I was caught in this kind of trap once in 2020. Why is it weird? Because I'm very experienced in these financial questions, but still, I had a pretty big cushion of safety for investing that I've collected for the case, you won't believe me, in a case of stock market crash. Therefore, when I met March 2020 and those incredibly tasty prices for assets seduced me like crazy. And I need to mention here in order to defend my human essence. I'm not Android. And I was scared of this crash also. So this March 2020 has been very painful for me. My portfolio showed minus 30%, but I just stuck to my plan and bought equities on my investing cushion and frankly speaking, a little bit more than that cushion. So, for sure you may say that lucky guy and such a nice moment to buy at the end of March 2020 and in terms of assets it was a good decision that I made much earlier than the crash happened. Because I make an investing plan before I buy any first assets on any account. But after some months I've discovered that I climbed up in the money that I left for the beginning of my new clothes business. Therefore, suddenly I realized that I've made some financial mistake without realizing. I get my hairy hand into my business opportunities account. I know it's a common practice for entrepreneurs to have cash gaps every time. You're not entrepreneur if you didn't have this kind of problem, somebody says. And it wasn't the first time for me either, so I just laughed at all. How many times will you step into this trap, Constantine? Don't be so stupid. Next time. It wasn't a crucial mistake and I just needed to wait 1-2 months in order to get this cash from my active income to start that new businesses. And for sure, after 1 year, the stock market gave me much better returns than this clothes business. But this is still a mistake. Despite how it finished with profits or losses in a moment, it still was a mistake in general. It's nice to have a written plan on that emergency case of a stock market crash. It's not enough to keep it in your smart head because it may be needed after 4 years of bull market and you totally lose your vigilance and all the details of the plan will be forgotten. So it's better to have a specific plan on the paper. It's very easy to reason about hunger when you are well fed. But when you are hungry, you forget everything and do not plan things in a hurry. By the way, the same plan was recommended by great teacher Graham. This Graham for sure. Definitely Benjamin Graham. And I guess this should become a new video if you want to hear about discipline in investing. I will understand this by your comment or an investment in the like button, the video that dramatically will help me guys and girls. I very appreciate that you invest your time in such a financial education for yourself. I hope you subscribe to the channel now and will watch new videos. Goodbye and see you soon.